Welcome, everybody, to the Wealth Building for Dummies podcast. My name is Kyle Demian, and I'm here with Renji Matthew, as always. Today, we're going to be talking about the first steps to building wealth. And I don't think we've ever done a podcast on this yet. We've talked about all these other ways to build wealth and different strategies, tax strategies, ways to save money. And I don't think we ever started with the basics. So that's what this is going to be, how to lay your financial foundation to bridge you to getting to success. A lot of people want to build a solid financial house, but we're going to talk about the first two steps in laying that foundation to build a solid financial house and how to get on the right steps to building generational wealth. So Renji, the first thing we're going to talk about is financial education, right? And we're not taught about money in schools. Most families don't talk about money. So people are kind of left to, their own education, their own actions to go out and learn, first of all, just about how money works. And then to take it to the next step and try to build, wealth and try to build generational wealth. That's going to take some extra steps too. But where should people start at?
Yeah. So, the easiest way is listen to podcasts like these, read books. YouTube has a lot of free education on there. That's the easiest way. And like Kyle said, a lot of us were not taught about money growing up. We didn't get any education about it at school. Even like growing up in the family I grew up in, my parents took good care of us, provided and everything, but we never actually got to have a sit down talk and conversation about how money works and how finances should be handled and stuff like that. So when I moved on to college, I got in a lot of credit card debt because I was like, oh, hey, this is free money. Let me swipe. But
Yeah.
so having that foundation can set you up for a better future and to reach your goals and stuff when you have them later. So yeah, the easiest way is reading books, listening to podcasts, watching a lot of free stuff on YouTube. And today we'll talk a little bit about where you want to start, how to set up the foundation, and how we start with the end in mind. And then we go backwards, right? So we've talked about in the past where you want to set huge goals. But if you look at the goals at the very end and you don't set goals to reach those big goals, you're going to look at it as, oh man, that's a huge thing. I don't know if I can ever make it. But let's say you have big dreams and big goals. If you set smaller goals in front of it to achieve those big ones, eventually those big ones won't look like, this is manageable. I can get there, because the small goals are doable goals, and you set smaller goals like that for, what am I going to do this day? What am I going to do this week, this month? So if you keep setting goals like that, eventually, let's say your 5-year plan or your 10-year plan might look crazy, but if you set those smaller goals, you can achieve those a lot easier. So we'll talk about all of those today. And for me, a lot of the ways I got education was experiences. Life experiences are how I got it, right? So it's like your life experiences can be your life lessons. So I made a lot of mistakes, got into so much in debt from different mistakes I've made. But I've always had okay, let's not quit. Let's keep going. Let's figure something out. And I think that's why I've been able to keep going. And, God knows where I was, and he's brought me this far. So it's just about not quitting and keep going, and then learning from your mistakes. A lot of the mistakes I made in the past were because I wasn't willing to learn. I had to have a humbling moment of, it's like, okay, I have to learn from others. I have to do research and, figure things out instead of jumping into things without knowing what I'm doing or whatever,
Yeah.
Be willing to listen to others' advice and stuff like that instead of thinking, oh, I know everything. That's, I think, one of the things that a lot of people do, especially what I did. So I think your life experiences can be your life lessons, because you'll learn, okay, I won't make that mistake again because I know what I did. And not only that, those mistakes happen for a reason, because now again, it's a lesson you've learned from. You won't make those same mistakes again. And now all the people that you meet later that want to reach those same goals, you can be a microphone for them to listen to so they don't make the same mistakes. Hopefully, if they listen to you, right? What about you, Kyle? What about your background and how where you got to?
Yeah. So same, similar stories. Learning. Wasn't taught about money in school. Actually, we did have a money course on school. It did talk to us about. The only thing I remember from it was this course or this game we had to play where we divided up into teams of 3 to 4 people, and we would pick stocks. We had, I think they started us off with like a $50,000 budget, and we had to pick stocks and try to see, if how profitable we could make our teams and how profitable we can make our businesses. So we started off with $50,000, and I remember the first few days in, we were doing really well. And I think this was at the time, that movie had came out with Jordan Belfort, Wolf of Wall Street, where they got rich off penny stocks, right? So I think our strategy was like, hey, we're gonna pick all these different penny stocks. Like a week in, we were crushing everybody else. We were first on the leaderboards, but it's like an 8-week game, I think. And fast forward to the eighth week, and we were down to like $1,000 in our account. We were in dead last place out of everybody, and so that was my experience in school learning about money. It was supposed to be an educational game, and we took a risky approach, and we lost all our money. And we got last place, I think, out of the whole. I don't know if that was a statewide game or a region-wide game, but I don't remember what it was called. But that was the only thing I remembered from that. And obviously, for me, that's not a good experience. Thinking, oh, we had 50 grand and we just lost it all. That's what happens in the stock market, which is not necessarily true, but it can. And obviously, it did for us. So like that was my experience with money in school. We had that class, but I don't remember anything else really from it. And so yeah, we're not taught about money in schools growing up. And my parents didn't really talk about money at the kitchen table. It was rare for us to ever have everybody together, even sitting at the kitchen table, let alone for us to have conversations with money, because my parents were always working. I was playing sports, so it just never really came up. And so I was left to myself to learn about money and to get the education myself. And luckily one day I stumbled across a couple people on YouTube talking about money and talking about how they were building wealth through real estate investing and apartment complexes. A guy named Grant Cardone, if you're familiar with him, he 10 years ago, he was getting a lot of attention across social media from being really loud, rambunctious and crazy. And it worked. He got my attention. I started listening to him. I went to a couple of his 10X growth conferences, is what he calls them. And I just got exposed to another level of the money game that I'd never seen before. And that had me reaching out and, finding mentors, which could be another step for, what's the first steps for, starting to build wealth. Find people that are in the position that you want to be in the future, and just mirror and emulate what they're doing. We've been lucky enough to have a couple of the same, millionaire mentors, and we've learned so much from them. And they've encouraged us to start a podcast, to get on social media, to start talking about the information we've learned about finances and money. And it's helped us grow our business. And, it all starts with education, getting a financial education, whether you have one or you don't. Starting with podcasts, books, YouTube, there's so much information that's out there now, and different people have different messages. We've talked about like Dave Ramsey is, how to get out of debt. But if you're not in debt, I wouldn't recommend listening to Dave Ramsey, because he's going to tell you about how to pay everything off, and not how to necessarily build wealth, because he thinks real estate is risky. But in reality, real estate has built the most, multimillionaires. So with that, you got to just follow different people for whatever your goals are and whatever phase you're at in life. I know you talked about how you guys went through the Dave Ramsey model, and I don't think you're upset with the decision you made, but he got you from point A to point B, and now you guys are leveling up and already in real estate and investing and stuff. And that's not Dave Ramsey's world, so you got to start with the education. Once you've got the education, then we talk about laying a financial foundation. And what I mean by that is, if you guys have ever been to a site where they're building a house, right? Before they ever start to build this massive mansion or this, this beautiful ranch, what is the first step that they do? They lay the foundation for the house, right? That is what's first. The foundation doesn't serve any other purpose for what the house is going to be built on, and making sure that the house is stable, right? And making sure that if all else fails, you still have the foundation to build another house, right? If a tornado comes through, you can rebuild from the foundation. Reason I say that is because there is one tool in the financial world that we can use to set our financial foundation. What I mean by that is, um, to keep it, very blunt, we are all going to die one day. Unfortunately, that's the truth, right? We just don't know when that day is going to come. And especially if you're watching this show and you're young, you may think that day is 30, 40, 50 years away. What may be more likely between now and, God forbid, the time that you pass away, may be like a heart attack, stroke, cancer, anything, like any major medical event. And what most people don't realize is that there's a secret financial tool out there that, God forbid, you pass away too soon or have a major medical event too soon. This financial tool will pay out to you and or your family and relieve so many financial troubles and financial issues that come up, right? And that tool is life insurance. You can put $50 this month today into life insurance, and God forbid, if you pass away tomorrow, it could pay out $100,000. It could pay out $1,000,000, depending on the type of policy you have for your family, right? And that's what we're talking about, laying the financial foundation. If you want to build generational wealth, guess what's the quickest way to build generational wealth? The quickest way to guarantee that you leave generational wealth, that's through a life insurance policy, right? If you put $50 into the market today, even if you put it into Bitcoin, I don't care what cryptocurrency you pick, tomorrow it's not going to turn into $100,000. Tomorrow it's not going to turn into a million, right? And most people don't even realize that life insurance can do this, or they've never really thought about life insurance can do this because it's not required, right? People think life insurance isn't needed, oh, I don't need it. But most people also don't realize that, something like a heart attack or cancer, you can use your life insurance death benefit while you're still alive, right? So imagine something like that did happen. A major medical event is the number one cause for foreclosures in the United States and bankruptcies because of these large medical bills that can come with it. So having a life insurance policy that's this flexible and this versatile, that could cover you not only just if you pass away, because I think most people realize that, right? But even if you get sick somewhere along your journey to building wealth, it's got access to, you've got access to the death benefit that you can use while you're alive with the right type of life insurance policy. You just have to make sure that policy has those benefits, right? So with that, Renji, are you having some audio issues? Or did you figure it out?
I lost you.
You did? That's okay. I can keep going. So
Let's see.
when it comes to life insurance, there's really three main types of life insurance. There's term life insurance, there's whole life insurance, and then there's also index universal life insurance. These three types of life insurance do serve different benefits, and it's based on where you're at and what makes the most sense for you, right? So with term insurance is really good because it's going to last you a period of time, whether that's 10, 20, or 30 years. And term insurance is really good for, times of your life where you may really need to have this coverage for you and your family. And some of those examples are, whether or not you have little kids and or if you've got a mortgage on your property, right? It could make sense to have a term policy to cover you for your mortgage. Whole life insurance could be if you just want something that's guaranteed to pay out, God forbid, whenever you pass away, right? It will be more expensive than term, but you can think of it more as like a guaranteed savings account for your family where you're stashing away money, and at some point it is going to pay out to your loved ones, whether that's your spouse or your kids. With whole life insurance, it does build a cash value as well that is based on a guaranteed rate of return, sometimes between 2 to 4% rates of return. And over time, once that builds, you can borrow from it and you can actually use it if you'd like as well. And we've talked about some different wealth building strategies where a lot of the wealthy use these for that purpose as its own, like, family bank, right? And then the last type of insurance is what's called index universal life insurance. Another type of policy that when properly structured, will be a permanent life insurance policy. It'll never end or never expire. And unlike the whole life insurance, it's actually based on a selected index in the stock market. So you will get a little bit better rates of returns when the market's doing well. But if the market's doing bad, you're not going to lose any of your money. It will be protected from the market. So instead of losing 40%, if the market's crashing 40%, you'll just get a 0% rate of return. But when the market's doing well, you will grow with the market too. And that's how your cash value builds up inside of the account. Once again, the index universal life can be, a flexible wealth building strategy. And once you've built up this cash value, the pretty cool thing about it is, you can use it as a tax-free retirement income to supplement what else you have from 401ks, your IRAs, if you have Social Security or pensions. You can also take money from your IUL and use it as tax-free retirement income. And speaking of tax-free, that's probably one of the greatest benefits of all of these life insurance accounts is that everything inside of life insurance is tax-free. Your death benefit when you pass away, goes to your heirs tax-free. Your living benefits, if you ever have one of those major medical events, you can access that money tax-free. And then also, once you have a cash value built up, if you have a cash value built up, if it's properly structured, which is very, very important if you're using it for this benefit, you can use the income from the plan tax-free in retirement, which is pretty cool. And we've talked before about that in some different wealth building strategies using life insurance. One of the questions I did get in the chat, which I'm going to turn over to you, Renji, somebody did ask, can you have more than one life insurance policy? And let's just take a couple minutes and talk about like the life insurance that we have set up, because we're actively using these strategies that we talk about to protect ourselves and our family, right? So, Reggie, can you have more than one policy, and what are you doing for you and your family?
Yeah, you can. Sorry, I got cut out there for a minute, so I didn't hear a lot of what you said. But yeah, you can use any of those strategies how many ever times. Well, there's limits. So each life insurance company will allow you to have up to 10 times your income as the death benefit. So for example, if you make 100,000 a year, you can have up to $1 million in death benefit from one company. But the government as a whole will allow you to have 26 times your income. So that could be with multiple different companies. You could have multiple IULs or multiple terms with each company. It just varies where you want to do. So ourselves, we have several policies. So it's not one size fits all. There's a reason for each of them and why we use it for. So I have a huge term for if, let's say, something happens to me. I don't want Nina to have to go back to work. So the huge terms are so it can pay off all the mortgages that we have on our rental properties. That way it's free and clear, and Nina has a passive income stream that's coming in, so she never has to go back to work. Then we have IULs because, again, it's building wealth. You can use it to buy assets instead of using your bank account. If you use it in here, it's safe just like your bank. It grows tax-free, unlike your bank, and you can access it at any time. Where in a bank, if you access that money to go put it into an investment, it's gone from your bank account. It's growing in your asset, but it's gone from your bank account. But in an IUL, when you take that money to go put it into an asset, it's growing. It's still compounding in the IUL as if you never touched it. So why not use that strategy? Because now my money is multiplying two different places, right? So so those are the two we have. We have terms. We have a couple terms and IUL. We have a whole life also, but again, we use the whole life and the IUL for the living benefits, because something that a lot of people might not realize is, if you guys have ever heard of your parents talk or grandparents talk about heart attack insurance, cancer insurance, it's more of the long-term insurances, right? They cost a lot of money. But these whole life and IULs, they come with living benefits. They come with chronic, critical, and terminal illness. If you can qualify for it, if you're pretty healthy, if you can qualify for a term, you can qualify for those for sure. Terms are the hardest things to get qualified for because you're paying the lowest amount of money to have the highest amount of death benefit. But I think less than 5% of terms actually pay out because you're pretty healthy. You live past the term. So we have the terms in case something happens to me. But I think my term runs out when I'm in my 60s. So if something happens to me before then, it pays most of our. I mean, as of right now, it would pay off all our mortgages that we have. I'm sure we'll build on top of that, and I might end up getting more terms later. But it's again only there to help pay off all our mortgages. That way, Nina would never have to go back to work, and she can still keep doing what she's doing. But yeah, so those are the different ones we have. What about you, Kyle? Why don't you talk about how you use them and what strategies you use them for?
Yeah. So I started in IUL, I think when I was 21. And so I have an IUL for myself for the purpose of it's properly structured. So it's for the purpose of the tax-free accumulation. So I can use that money for investments, real estate, and whatever I want. And then on top of that, uh, what I think is actually kind of interesting is I knew the benefits of life insurance. So I secured a $1 million term policy when I was 22. And at 22, I didn't have a family. I didn't have any kids. I 22. Let's see. I would say I wasn't still living at home. I was on my own, but I secured and I had over $1 million worth of life insurance before I had any assets, before I had any family, before I had any kids, because I knew of the power of life insurance. And at 22, you can lock in your rates for the next 30 years. That's what I did. So now I have this $1 million policy that's going to cover me until the age of 52, and it's going to be priced at my age of 22. So God forbid anything happens to me, I've got the living benefits that I can access and use. And, or if I, God forbid, to pass away before 52, I'm leaving that generational wealth that I talked about. Right. And that's if I don't build any assets, if I don't build any business, like that is the worst case scenario. So that's what we talk about. Like when we're talking about laying this financial foundation, Renji and I have taken the action, taken the steps. We're both guaranteeing that should anything happen to us before we build, our real estate portfolio even further, and before we build a business even further, we've got security for our families of $1 million plus, right? We did I actually did a TikTok yesterday talking about, GoFundMe's, because GoFundMe is the alternative route. Whether you have life insurance or you have a GoFundMe account, like that's what it comes down to. Because most people don't realize, but the average cost of a funeral is like eight to almost $10,000. So how would you raise $10,000 if you needed to within the next month to pay for a burial? If you don't have life insurance, you got to go the GoFundMe route. And I was breaking down the math, and to raise $10,000 within a month, you would need to find 100 people, all willing and able to donate $100, right? Which 100 people is a lot of people. And with hearing, from our podcast, hearing the people that comment on our TikTok post, there's a lot of people that just don't have an extra $100 to be able to donate something like that right now with what the economy is doing. So, like the GoFundMe route, every time I see it, it breaks my heart, and it's super super sad because the family has gotten to a point where they need that assistance, right? They need the financial assistance, and it all could have been prevented if there was a life insurance policy that was in force, right? And I saw another one probably a few weeks ago from somebody that's undergoing medical treatment, and same thing. If people would have just known that life insurance can provide living benefits while you're alive, you can use the money from life insurance for these medical treatments, right? And it just puts the families in such a hard bind where if you had life insurance in force, you wouldn't have to worry about it, right? So it's something that can be prevented. But once again, the knowledge, the education isn't there, which is what we, try to provide on this show. So with that, I think, Renji, I'll toss it over to you here in a second if you want to wrap us up with anything else. But just going back to the beginning, laying the financial foundation starts with educating yourself, maybe finding mentors or people on your side. They're going to be able there to root you on, cheer you on, and keep you on the path. And then securing life insurance, I think, is a major key. That way you're locking in guarantees for yourself, because the only thing that's guaranteed in life is death and
Taxes.
Taxes, death and taxes, right? So how do you prevent death and taxes from ruining your financial future? Life insurance definitely helps you on the death side, and like we already talked about, everything built up inside of life insurance is tax free. So life insurance is the only tool that helps you with both, right? So with that, Renji, anything that you want to leave us with for today before we wrap up our show?
Yeah, when you mentioned guarantees, that also ties into something that I forgot to mention, and this was actually a question in on my live about talking about my son. So we also have an IUL on my son that we set up on him. Now he's 5. He was 3 when we set it up on him. With kids, these can be an amazing tool, more so with kids because again, it's based off life insurance, so the cost is based off your age. So him being 3 when we set it up is so much cheaper than setting it up on myself or my wife, because we're a lot older, right? So, and with him having more time to compound, it's going to do so much more. Like by the time he's in his late 30s, conservatively, if the market only did 5%, he would have 500,000 in there, which is crazy. And one thing that a lot of people don't know about too is, unlike a 529 plan, which is what the most common thing is, what parents start for kids, it's not an asset. So when they apply for financial aid when they get to college, right? When they're 18, they're trying to go to college. Let's say when they apply for financial aid, it doesn't show up as an asset when they do the search because it's considered life insurance. Unlike 529 plans, if they have an IRA, if they have money, if you've saved aside for them in the bank account, those all come up as assets. So that can hinder them um, getting financial aid. Honestly, though, at this point, by the time he gets to 18, we'll have too much assets ourselves that he won't get that availability. But for people that don't have that, this could be a way for you to build wealth for your kids, this is why we talk about the $1 million baby, and another thing, we don't talk about this a lot at all on the podcast, but our son was diagnosed with autism last year, and he can't get approved for a lot of things now. So thank God we got that set up before, because he can't get approved for a lot of things. So that's something that, going back to what Kyle mentioned, don't wait till you're unhealthy to look for these things. Don't wait till you have a heart attack or something happens to you when you start looking for these things, because when you're not healthy, either things will cost way more or you can't get approved at all. Right. So the only few times I've had people get denied for these is because their health was really bad or they were too old and they were taking too many medications. If you wait till the end to get something set up, it's going to cost way more money. And at that point, it might not make sense. It might be easier to do a GoFundMe at that point. So the earlier you start these things, the cost will be cheaper and the healthier you are. Because we've come across a lot of people that are in their 20s and early 30s. They're like, oh, I'll live long enough. But one, other than heart attacks and stuff, one of the highest causes of death is accidents, especially in young people. You don't know when you're going to have an accident. So if you have
Mm-hmm.
these things in place, and no matter what happens, you're not only protecting your family, you're also protecting them from any of your financial burdens that you're leaving, because other than federal loans, every other loan, any other debt you have will pass on to your next of kin. So you're not only leaving them with the funeral bill, but you're also leaving them with all your debt. So at least this way you're protecting them from your burdens. So think about that when you guys think about setting up a foundation, because a strong foundation, what is that? What does it say? The foolish man built his house on the sand, the wise man built his house on the rock. A strong foundation, if it's set right, like Kyle said before, even if a tornado comes by, that foundation's still there. Everything on top might be gone, but the foundation is still there. So if you start with setting up the future of your family with life insurance, no matter what happens to you, they're fine. Now, on top of that, if you build wealth and everything like that, now you're leaving them with the legacy also, right? So there's something to think about. That's why we talk about life insurance. It's not because we're trying to sell stuff to people. It's what we're actually doing ourselves. It's not only for building wealth, but it's also to protect your family in case something ever, God forbid, happens to you. That's all I wanted to add to that, Kyle.
I like that. That was good. Absolutely. And that's a perfect way to round up our show for us today. With that being said, we are releasing and actually creating a school community where once that's finalized, which we're probably going to take another week or so, we'll be able to start inviting you guys into that to take you guys through what we're going to call the 6 money markers, or the 6 steps to building generational wealth, where we're going to talk a lot more in depth about, what we talked about today on the podcast, and give you guys the financial education that, we wish we would have had in a succinct, laid out, nice, basically plan to take us from, not knowing anything to building, building generational wealth. And with that being said, we'll let you guys know and keep you up to date as that's posted and that's ready. And there's not going to be any cost to it. We wanted to start it off and have it free so that we can just get this education out there to people. And then we may build on, a paid community beyond that, where it's advanced wealth building, strategies and techniques, where we'll be able to access and jump on one-on-one calls with you to help you guys out, answer questions, and help you build generational wealth as well. So we'll keep you up to date on that. That is coming soon. Keep on the lookout, and make sure to follow us on social media, as we'll be posting updates there as well. And with that, I think that's a good way to wrap up the show. Make sure to like, comment, and subscribe, and share this with friends. If you found, you got a lot of information out of this, if you don't mind, please help us out and share this with others, and make sure to subscribe. That's how we know that we're providing, great content, and we should continue on. I think we're like maybe 45 or so shows in by now. And, we love the feedback from you guys, and that helps us determine, what we should have on our next shows as well. We've had people message us saying, hey, can you cover this? Asking specific questions about, some of our other shows. And that's what we're here to do, is just to help and spread the knowledge, help others build generational wealth. And with that, we will see you guys on the next episode. Take care. Have a good one.